Hello, my name is Ray Franklin. I'm the commodity analyst for Energy Professionals. In today's video, I'll be discussing my winter update. First, I'll review natural gas rates in 2021, and then I'll discuss the outlook for 2022, short-term and long-term. In 2021, natural gas increased 43%, rallying from $2.58 to $3.68 as we begin trading in 2022. Natural gas's rally initially started in April and moved sharply higher into the fall before milder than normal weather short-circuited the rally. But as we enter a new year, we face the prospect of increased volatility due to rising competition for our natural gas supplies from buyers overseas. In the short term, as I wrote in my December 6th energy update, the milder than normal weather forecasted for the first half of December led to prices plunging from their fall high. And after writing my December 6th energy update, milder than normal weather continued through the end of the month. But as you can see in this chart, natural gas didn't continue its decline. Instead, it has consolidated near the lower Bollinger Band. When a market doesn't decline when the news justifies a decline, it is telling you short-term the path of least resistance is likely to the upside. I am not saying natural gas must go higher from here. If warmer than normal weather persists this month, the consolidation pattern could be resolved to the downside. But if the January through March weather is colder than normal, natural gas pricing is poised to move sharply higher short term. Next, I want to look at natural gas from a long-term perspective. Since the beginning of this year, I have warned energy prices were increasing primarily due to the present administration's restrictive energy policies, aggressive fiscal spending, and quantitative easing by the Fed. And these factors collectively increase the risk of inflation in the United States. Also, as we enter this year's winter heating season, due to their green energy policies, Europe's natural gas supplies were near a 10-year low, which increases the risk of higher pricing not only this year, but long term. Since the policies leading to today's high prices are not abating, they are becoming more entrenched abroad. Overseas, buyers of our natural gas has greatly increased over the last 5 years, when most of the infrastructure required to ship the fuel overseas didn't exist. But today, with the increased capability to export liquefied natural gas, demand for our gas will increase when pricing overseas increase, and we should anticipate increased price volatility will be present relative to recent history. In my December 6th energy update, I said early in the 21st century, we experienced higher natural gas prices and volatility prior to fracking giving us sufficient supplies to meet our energy needs. But over the last 10 years, we were blessed with a period of lower prices and volatility with fracking giving us sufficient supplies to meet our energy needs. But the long-term risk factors discussed earlier have increased the potential that we will return to the prior period of higher prices and volatility before fracking. I believe we are entering an extended period of high volatility in which the timing of entering hedges is extremely important. When prices decline during periods of lower than expected demand, it should be used as an opportunity to lock in a fixed rate. Therefore, if you've not already hedged your cost of natural gas or electricity, I recommend you take advantage of the unexpected short-term decline in natural gas as protection against the risk of higher natural gas and electricity prices long-term. Although it is possible rates could go lower short-term, I am confident there will be a time in 2022 when rates will be significantly higher than where they are as I'm recording this video. And hopefully today's video helps you understand why I believe the unexpected short-term decline in natural gas is an excellent opportunity for you to protect yourself against the risk of higher natural gas and electricity prices long-term. And until my next report, please take care.